there's a way by which you can claim 50% of your income as expenses without doing anything.
No, I've got no idea about it. My wife, when that Tata Technology IPO had come, so one of her friends got that IPO.
Oh, kya baat hai. She got to know the power.
Exactly.
And how many shares do you have in your portfolio now?
I think 51 or 52.
And what is the value of those stocks?
Today's date, I think it will be around 25.
What are your short-term and long-term goals?
Probably in next 5 years, I will like to have a good luxury car. And another important long-term goal is to retire early. 37,000 rupees SIP per month from now itself.
For the down payment of that car at that stage.
Okay.
Hi Saurav and welcome to a brand new episode of Money Wise. Can you tell us what you do and where you're from?
Thank you. I am Dr. Saurav Sharma. I am from Kolkata and I am a pediatrician and I practice here in Kolkata itself.
Superb. And how old are you?
I am 34.
34. Perfect. And can you tell me what is your current annual income?
Like I'll tell it as a couple because I always consider the money that me and my wife earns as a together thing, and we try to spend because we spend and invest also accordingly.
Correct.
So together we earn around 5.5 to 6 per month.
Per month. And this is in hand money or tax gets deducted after this?
This is kind of in hand.
In hand. All right. Perfect.
Yeah.
And do you both draw salaries or is there, because as
No.
doctors,
That is the thing. My wife draws a salary,
okay,
like it's a fixed salary, but mine is a totally freelance pediatrician. Like it's totally like the number of patients I see, I earn according to that.
Understood. Got it. So Saurav, do you know that because you are technically a consultant, right? You don't draw a salary. There is a way, and you might also be exploring this. There's a way by which you can claim 50% of your income as expenses without doing anything while filing taxes.
No, I've got no idea about this.
Yeah. So let's say you earn. So what is your part of the 5.5, 6 lakhs roughly yearly? If you
see, the thing is, it's almost like 3 each.
3 each, right? So 36 lakhs is what you earn roughly, give or take. Yeah. So now, while filing taxes under Section 44 ADA, which is something that the government has in place to promote business owners like you and me, small business owners.
Okay.
So we can claim 50% without showing any bills or receipt as expenses. So instead of 36 lakhs, you pay tax on 18 lakhs, which is fantastic because you don't have to worry about keeping those bills, receipts, or the CA doesn't have to go through your bank statement, sift through expenses. Now, if your expenses are more than 18 lakhs, you can obviously claim more than 18 lakhs. But I'm guessing because you are self-employed, in a way, you don't have employees or other major expenses.
No, I don't have employees.
This becomes flat out 50% saved in taxes. Because only 50% of your income will be taxable. And then if you are still claiming other deductions, right, under the old regime, whether it's ATC, whether it's NPS, medical insurance, all of that will further get deducted from 18 lakhs.
Okay.
You end up paying significantly lower tax. So combined, you earn about 72 lakhs per year. Correct? Both of you. About 5.5, 6 lakhs.
Keep it around 65, I guess 65, 70, 72 sounds too much.
Yeah, even 65 sounds a lot.
No, 65 is a decent number.
Yeah. So now tell me, what are the major fixed expenses that go out? Let's quickly go through your expenses one by one. The big ones.
Fixed expenses. First major expenses are home loan.
So what is your home loan EMI that goes out today?
1 lakh.
1 lakh. And what is the home loan amount?
1 crore 50 lakhs.
1 crore 50 lakh. Got it. Superb. So 1 lakh goes towards home loan EMI.
Yeah.
Then how much do you think would go towards groceries and just house maintenance, house health, all of those maintenance expenses?
See, the maintenance is around 6,000 and maid's salary and everything, if I calculate, it will be around 11,000. 11 and 6, almost 18,000.
18,000, and that also includes electricity bill and other things like that, gas bill.
No. Electricity bill is again around 3,000.
Especially in the summer, it would really shoot up right now.
Yeah, 3,000.
Around 3,000. So you have about 1,20,000 towards all these expenses that today goes out, correct?
Then other than that, there's fuel.
Correct, fuel. Correct.
Yeah, fuel, I guess it will be around 10 10 to 12, I guess.
10 to 12. And this is for both you and your wife combined because both of you step out?
No. Together, I think it will be 15 or 16.
15, 16. Okay. So that's a big expense that goes out.
Yeah,
and the car that you used to paid for on loan currently, what is
No. They are totally on down payment. Like, they don't
paid
have
for?
any-
Okay, super. Great. And now tell me one more thing. One of the big expenses that most people incur is eating out, going out, partying.
Yeah, the thing
Dinner.
is eating out partner since the time we have moved in to our new place. Like because it is new, so like majority of the times we end up partying at our place only.
Correct.
Like that cost has drastically come down because otherwise we used to go out, for parties and all. But right now, like we feel like घर पे ही सब सही है.
All right. So I would say though, eating out, ordering in would be how much roughly, if you can put a number to it, so that we have some broad numbers in mind.
I don't think it will cross more than 5,000. I don't think so.
More than 5,000. And groceries, let's say you included groceries as a part of the 15,000 earlier or no?
No.
Groceries
Grocery will be totally different.
Okay. And give me a rough
Because
estimate.
only this was the first one that we tried to calculate all this grocery and
Wow.
after contacting you. I'm still not, I still haven't added them up.
Got it.
But
No
see,
worries.
the major expenses that, like what I realized, the major expense is the raw meat and fish we get.
Got it.
Because that is a good amount of expense. I feel, I guess 12 to 13,000 should be decent. I guess
12 to 13,000. Okay. So we are 1 lakh home loan EMI, about 15 odd thousand, 15, 20,000 home expenses, maintenance, this and that. Yeah. And about 15,000 as fuel expenses. So that's 1.35 lakhs. Yeah. With groceries, let's say 20, 25,000 on the higher end. Right. You are at 1.6 lakhs. Now, I'm guessing these are the usual expenses, recurring expenses that take place. And then you have stuff like vacations. Or shopping or buying gift for someone. So, do you often go out for a vacation? If yes, what is the amount you
The thing is, we want to, but because of our work, we are not able to. So even if we want to, we can't.
Story of everyone's life.
Yeah, exactly.
Yeah. Okay. Got it. So, have you been for a vacation in the past 1 year? Let me put it.
Yeah. We usually end up going at least once in 2 to 3 months.
Understood. So, if you were to put a number on it every time, because these are small vacations happening in and around, managing work and things like that, I would say 10,000 rupees per month roughly. If you average out the month.
The total vacation.
Total, so about a lakh and a half per year.
Yeah.
Everything
10,000, 15. You can keep 15.
15. All right. Great. So we are at about 1.8 lakhs currently in terms of total expenses. Then, which also includes your home loan, by the way, which is so far fantastic because that is, despite that, you have a lot of money that is left every month.
Yeah.
It's great. Then the boring stuff, but the important stuff, insurance for yourself, your parents, the house.
Insurance I have for myself and for both of my parents. Probably the total amount, all three including, it will be around 75, I think.
75. So about 7,000 rupees per month if you look at it monthly. Got it. Understood.
Yeah.
And anything else that you recurringly spend on, whether it's parlors, whether it's because you host a lot of people buying alcohol or buying different things around.
Buying alcohol, that happens every month.
Okay.
Alcohol you can consider around 7,000 a month, I guess.
Around 7,000. So about, got it. So we are getting closer to about 2 lakhs now with all these costs, and let's add a 10% buffer over that. So about 2 to 2.2 lakhs is what is going out every month, including the home loan EMI. Correct?
Then I tend to give my parents some cash other than this also.
Got it.
So that is around 20.
20. Okay. Got it. So we are at about 2.2, 2.4 now with the 10% buffer. Got it. And what about your in-laws? Are they also dependent on you two or not?
No.
They are independent.
They're not at all dependent. Recently, the only problem is that we have a lot of expenditure regarding the interiors of our place. Correct. That is a totally one added expense that I am dealing with.
So let's do one thing, right? Let's say every month for the next 1 year, you'd be spending 1 lakh rupees on your interior. Does that make sense?
1 lakh a month.
1 lakh a month for the next 12 months?
Yeah, easy.
Got it. So let's keep that aside, right? So 2.5 lakh is what you are spending on fixed costs.
Hmm.
1 lakh extra for the next 1 year on interiors.
Yeah.
So you spend your 12 extra 13 lakhs there.
Hmm.
You're drawing 5.5 lakh rupees together as a couple in hand every month. So you're left with about 2 to 2.2 lakhs that is available to do various things.
Yeah.
Outside of your expenses. So today, what are you doing with those 2 to 2.2 lakhs?
Now the thing is, I have SIP.
Okay.
Now currently my SIP is around 60,000 a month.
Okay. Okay.
Okay. And my wife, like as I said, like she has just started and just recently she understood the whole meaning of investment. Like this happened because like one of her friend and I both had applied for this Tata Technology IPO.
Okay.
So around four people had applied,
Yeah.
which whom she knew.
Yeah.
So the thing is, I knew about investment. I got to know about investment in 2021,
Yeah.
but I was like, I kept on telling her that, start investing, start investing. But till this time, she was like, no, 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 earn, enjoy, earn, enjoy. She's always been like that. But the thing is, when that Tata Technology IPO had come, so one of her friend got that IPO.
Oh, क्या बात है? She got to know the
And
power.
exactly. And as you know, on the day of listing, that was the day when she realized that what exactly happens in case if you invest. And then, I started showing her regarding my various portfolios that how it has improved over a period of time. So then she was like, okay, please suggest me also. So since last month, I started her SIP also as 50,000 per month.
Got it. Superb. क्या बात है? So you're investing 1.1 lakh rupees together as a couple in mutual
As
funds.
SIP, yeah.
Yeah.
Now, other than this, I always tend to buy share. Like I prefer buying shares rather than SIP.
Okay.
SIP, I consider it as a safe investment. Plus, it is disciplined because I always get a reminder on a particular day that yeah, I need to invest. But share market, as like no one can predict whether it is going to go down or whether it is going to go up. You never know whether it is the right time to buy. So the day if I feel that okay, I have some money and this stock is probably doing well, and right now, like due to something or the other, the stock prices has gone down.
Yeah.
That time I tend to buy that.
Got it. And how many shares do you have in your portfolio now? And how much is the value of it for the SIPs and for the mutual funds and for the stocks?
I think 51 or 52.
51, 52 stocks. Okay. And what is the value of those stocks? Portfolio
Today's date, I think it will be around 25.
25 lakhs. Okay. And what about mutual funds? What is their value today?
I think it will be around 8, 8.5.
8.5. Okay. So about 33, 34 lakhs together in equities.
Yeah.
Correct. Got it. Superb. 1.1 lakh you're doing your SIP. How much money do you invest in your stocks every month on average?
See, stocks is totally like, it totally depends on my mood. It totally depends on the money that I have and whatever little knowledge I have. Like, okay, like right now the market is a little down. Like, probably it is a good time to invest. That is when I invest.
Got it. Okay. Are you happy with your stock investments and how they have done?
A lot.
A lot.
I'm
Okay.
very happy.
What is the return that you have got on your stock investments?
I think it is around 52%.
52%. And over what period?
Close to 3 years.
Close to 3 years, and total absolute amount grown by 52%.
Yeah.
Correct? Got it. All right. What if I tell you, Saurav, and let me share my screen for this so that we can get into the nitty-gritties of this. Just give me 1 second. So in the past 3 years, the Indian stock market has returned about 17% CAGR. Okay, for an SIP.
17% per year.
Per year. Now, if you look at your stock performance, you've got 50.
So 17 per year is almost like close to 52 in 3 years.
Actually higher than 52 because it's compounding, right? Because first year 17, next, let's say you invest 1 lakh rupees, first year growth 17%. It's 1,17,000. Next year it again goes by 17%. It's 17% of 1,17,000. So it's higher than 17.
Okay.
Correct? It's about 18 and a half, if I got that number right off the top of my head. Year after that, you are at 1 point now, how much? 36 lakhs. So it's 17% of that. So
Understood.
So if you think about it, you are very happy with your stock performance. You got 52% returns in 1 year. But if you simply invest in an index fund, and for someone like you, Saurav, we don't just want to invest in a Nifty 50 index fund because that only invests in India's largest companies. you are young, you have been investing now for some time, you understand the power of investing and this equity markets. So we want to invest in large cap, mid cap, and small cap together.
Small cap, yeah.
Yeah. Which in an index, let's say, is represented by the BSE 500 index, where you get everything, large, mid, and small. Now the BSE 500 index has grown at almost 22%, if you think about it. Correct?
Okay.
Which is crazy. So that just means with added mid and small cap to your portfolio, your return has gone from 17% annually to almost 22% annually. The reason I'm sharing all of this with you is because I want to invite you to think about you're investing in 52 stocks across your 25 lakhs. It is physically, mentally impossible to keep a track of all these companies with a full-time job, which is as demanding as being a doctor.
Yeah.
Demanding in terms of hours, in terms of how much mind space is occupied by various things.
Exactly.
And at the same time, because your value varies as to how much you invest in stocks every month, you're not maximizing your investment potential every month. Some months you invest 1 lakh, some months you're investing 10,000, some months you're maybe not investing at all.
Yeah, exactly.
So because of that, so what tends to happen is if you don't stay invested on the days when the market grows the most, you're losing out on gains. So that becomes a very big factor when it comes to just, investing as much money as you can. And the way to do that, I'm going to invite you to think about this, is by investing higher amounts in mutual funds, because it goes like clockwork, right? You don't worry about what is the market, which stocks, when you have to sell, how is this company, what's the news. Fund manager's headache. So I'm going to invite you to think about that and sit with that after this call of ours and just think about how that makes you feel. Because there's an element that I can tell you enjoy about stock picking as well. Where you like that research, where you like buying, where you like seeing it, how it goes up and down. So what I would say is, take 10 to 15. Normally I say 10% at the most. But for you, I would say take up to 20% because you're investing large amounts. Take 10 to 20% of your money, not more than that, and only invest that in stocks. So you satisfy your curiosity, your knowledge bug for investing directly in stocks. Now, the reason I want Saurav for you to really maximize how much you want to invest is because I want to show you something. So I'm going to share my screen once again. So look, you have about 35 lakhs today in investments. You're 34 years old. Let's say you work for 20 more years. Currently, you're investing, let's say, 1,50,000 rupees every single month through your investments in mutual funds and stocks. With a 12% return, annual step up of 10% for 20 years, that grows to 33 crores. Okay. Now, let's say you're investing 1.5 lakhs because you're investing 40,000 in stocks, 1.1 lakh in mutual funds. You're only investing 40,000 in stocks simply because you're not sure how much to invest, where to invest.
I have absolutely no idea. Probably there are months when I invest probably 5,000-6,000 also. Not at all sure.
There you go, right? The thing is, when you're investing in stocks and you're not completely investing to your maximum potential, right? And you're keeping some money, at times 5,000-6,000, at times no money invested, at times 1 lakh invested. What is happening is, there are large chunks of time when you're not invested in the stock market, right? Because that money is sitting in your bank account because you haven't figured out. Now, let me tell you one thing. If you had missed in the past 20 years, the 10 best days when the market gained the most, your 1 lakh rupee investment would have grown to 9 lakhs. Imagine if you had stayed invested on all the days, how much your investment would have grown to? 18 lakhs.
Double down.
Okay, so here's that data. So missing just the 10 best days in the past 20 years, you are at 9 lakhs in value. Invested on all days, you're at 18.5 lakhs in value. So that's why I want you to think about investing most of your money in the mutual funds through SIPs. Because that is what is going to keep you invested. Because investing less money, you may miss out on the best days in the stock market. And how does that impact, let's say, your other potential, right? Let's say now you're investing 1.5 lakhs today, correct? Which gives you about 33 crores after 20 years. What if you make this 2 lakhs? This goes to 43 crores. So the impact of that 50,000 invested, like clockwork. And let's also just reduce this to.
Now, I had a question in this one.
Yes, please do.
Now, I have seen people telling me this also, that my SIP is hardly 60,000 only. Like, I've heard people say that never do that much amount of SIP.
Okay. What's the
Like,
reason
it
that you
does
do that?
not make sense to invest that much in SIP.
Okay. What's the rationale for that, according to
I
them?
have got no clue.
You got no clue. Okay.
The thing is, they did not have a rationale. That was the reason I'm asking you.
Got it.
Is
All
there
right.
anything like this?
Look, here's the thing, right? SIPs, what are they essentially investing in? Stocks only, but through a mutual fund
Mm-hmm.
wrapper. It's like a wrapper.
Understood.
Inside
Yeah.
that wrapper, you have stocks.
Mm-hmm.
Buying stocks only. Now, the thing is, the stock market moves up and down as the years roll. So, in the past 44 years, there have been only 4 instances when Indian large cap stocks have not fallen by more than 10% through the year. So that means every year, except for 4 years in the past 44 years, Indian markets have dropped by 10%. There have been days and years when it has dropped by 20%, 30% also. Now, the reason people are hesitant to invest in SIPs or mutual funds is because they feel it's risky. Because of this reason, because they see the value of their money drop 10% every year. Some people withdraw money when that happens. Some people buy more or stay invested. Doesn't matter. Now, going back to our conversation about an emergency fund, if you have 10, 15 lakhs, 4 to 6 months of expenses in a very, very safe place, you are not concerned about what's happening in your long term portfolio. Or let's say you have your interior design money, the 10, 12 lakh rupees for the year, going in a safe place. You don't care about what's happening in your long term portfolio because it's not meant for something that's going to happen in the next 5, 6 years. So, and over a 6 year period, in the past 25 years in the Indian stock market, through an SIP, you haven't lost money. By that, I mean you always had positive returns through an SIP. That doesn't mean it will continue, but this gives us an idea. Like history doesn't repeat, it rhymes, right? So, if it rhymes, we know if you stay invested for 5 years through an SIP, chances of you losing money are very, very low.
So there is nothing like that, like I need to limit out that no 60,000 is too much of money to invest in SIP or something.
Not at all. Saurav, I have clients today who invest 3, 4, 5 lakhs in an SIP.
Exactly, because what I felt during that time when I had this conversation, I thought that I can afford that 60,000 as SIP, then why not invest it?
Exactly.
So, like, if someone can afford to invest like 1.5 lakhs also in SIP, that is not at all a problem.
Not at all a problem. It's entirely dependent on how much money you earn, how much money you have to spend.
Exactly.
Yeah.
So, if one can afford, they should definitely try to spike up the amount of SIP that they are doing.
Absolutely. And the only reason for that is this sounds like the most foolish statement ever made in investing. But if you invest more money, you're going to get more money. So can you tell me where you're investing the 60,000 entirely? Fund name and amount? Can you tell me?
I can tell you.
Okay, so out of 60,
I will tell you. Large cap, I have only SBI Blue Chip.
Okay. SBI Blue
That is 10,000. Okay. Quant, I have small cap and mid cap, 10,000 each.
Okay. 30,000.
Okay. Then in mid cap, I have Kotak Emerging Equity.
Okay.
That is 5,000.
Okay.
HDFC Mid Cap Opportunities, that is another 5,000.
Okay.
Quant Mid Cap, that is another 10,000.
Got it.
And Nippon is the one that I have started for 200 rupees per day.
Got it. Nippon India Small Cap Fund. Got it.
And similarly, I had this query on my portfolio also, that people say that, I should not be taking so much of risk for investing a major amount in small cap and mid cap. Rather, I should be playing more safe towards large cap. But what I realize, in case if you are young and if you are willing to take the risk, it's better to invest in small cap and mid cap rather than the large cap.
Correct. I have 2 questions that will answer whether you should be doing this. So,
Yeah.
to put it broadly, you have about 10,000 rupees going into the blue chip fund, correct?
Yeah.
About 20,000 going into the 3 mid cap funds that you have, correct?
Yeah.
Kotak Emerging Equities, Quant Mid Cap, and HDFC Mid Cap Opportunities.
Mm-hmm.
The remaining 30,000 that you have is going into small cap funds, correct? And 2 small cap funds, Nippon India and Quant Small Cap.
And I think it is HDFC
You have another
small
small
cap.
cap fund? Okay, got it. Yeah. Now, with this portfolio, I have a couple of observations off the bat.
Hmm.
Usually, when you're investing in different funds, try to not invest in the same fund house. So now you have an HDFC mid cap and an HDFC small cap fund, a quant mid cap and a
Okay.
quant small cap fund. The reason for that is each fund house has a different investing style. So if you are exposed to the same investing style across categories, investing styles are like fashion. They come and go in style.
Yeah.
Yeah. So today, let's say value investing is popular, or today buying commodities is popular. After some time, it wouldn't be because economic conditions change. So commodities
Yeah.
become less, commodity oriented stocks become less attractive.
Yeah.
Banks would be attractive at some point. At some point, tech stocks would be attractive. Pharma stocks would be attractive.
Yeah.
So you want to invest ideally in different fund houses. So if you're investing in say five
Understood.
funds,
So
different
you
fund
are
houses.
basically trying to tell me, in case if I am choosing quant for small cap, I should not ideally be choosing the quant for mid cap or large cap.
Ideally, yes. Ideally, yes.
Yes, understood. Understood.
One more thing I would like to ask you is when you asked me whether you should be having such mid cap and high cap, large cap, such large mid cap and small cap exposure.
Yeah,
Yeah.
exactly.
One thing I'll ask you, Saurav, tomorrow, if your portfolio value, which is today now, 25 lakhs plus 8 lakhs, so you
If
have a
it goes
portfolio value
down
of about
drastically.
35 lakhs. Tomorrow, if that falls by 10 lakhs, 30%, it becomes 25 lakhs. What would you feel? What would your first instinct be?
The thing is, I will feel bad, but I know that over a period of time, it will recover and it will increase. So I am fine with that.
And are you going to be fine with it if it stays that way for 2 years?
Probably not.
Probably not. Okay. That answers your question. Usually, you want to have exposure to mid and small cap. Yes, when you're young, you have the ability to take on risk. You have the ability to stay invested for longer, right? Because you are young.
Yeah. Uh,
So having mid and small cap absolutely required in a youngster's portfolio. Having said that, how much of that to have is the important question.
understood.
Because if you have out of the 60,000, if you have 50,000 in mid and small caps, there is a very high chance that, in fact, let me show you one more thing. If you look at this chart, you have large cap, mid cap, and small cap. How much they have fallen every year?
No.
Highest fall has always been in small caps, if you notice. In most of the years, right? If you notice 2007 or 2012, it's not the case. But every other year almost, small caps have fallen more by mid caps. Mid caps have fallen more by large caps.
Wow.
Now, the reason I'm sharing this with you specifically is because when you're investing such high amounts in mid and small cap space, I think for me that's too high. If I was working with you, I would have had 25 out of the 60,000 rupees, about 20 to 25 at least going into large caps.
Okay.
And the remaining 30 to 35 spread into mid and small caps. That is just because we are used to today the market, if it falls, for it to rise very fast because of the COVID crash. Within 10 months, the market recovered. It was at its previous high. There have been times in the past where the markets have stayed stagnant or stayed low for long periods of time, more than 10 months, more than 2 years, 3 years at times. So you want to position yourself for the worst case scenario. If that happens,
Understood,
am I
understood.
willing to stay invested? There's nothing called as a right investment portfolio, right mutual fund. The right mutual fund portfolio is the one that keeps you invested. For some people, it is having entire money in mid caps. They're happy with that. They'll be okay with the value to go up and down.
Yeah.
For some people, it means having 30-40% money in bonds or fixed income, very safe investments. For some people, it means like you, I am guessing, having 40-50% money in large caps, the rest in mid and small caps. So does that answer your question about how to calculate?
Yeah. Understood.
Yeah. What are your short-term and long-term goals? For short-term, you had your interior designing of the house. And
Short term, right now I have interior designing,
correct.
and I don't have any like really short term goal. Like I have majorly long term goals only.
Got it.
One is because like my wife is more interested like that. We have a luxury car, so probably in next 5 years I will like to have a good luxury car.
Got it. And have you thought of a car that you could buy
No,
or
no,
you
no, no,
want to
no,
buy?
no, no.
No.
I don't have much idea regarding cars.
Got it.
It's only my wife who like, my wife is more like, she'll earn and she'll like to spend that money.
Got it.
So she's into these things. Like, she wants to spend her money and stuff.
Got it. Got it. Got it. All right. And what will be the value of that car roughly that you would want to buy?
Probably 50, 60, not more than that.
50, 60.
Like, at least I don't think so.
Okay, got it. So let me share with you one more screen. Let's see how to make that possible. So firstly, let's
And another important long-term goal is to retire early.
Is to retire early. Okay, we'll also look at that goal specifically. Okay, so firstly, let's look at, you said 50 lakhs is what you want, right, in terms of car?
Yeah.
So let's make this 50 lakhs in 5 years, roughly. And so that would be an inflation adjusted value of 80,000 rupees, 80 lakh rupees. Now for the car, you will take a loan, I'm guessing. So let's say you pay 33% as down payment. So that's 16.5 lakhs. It's going to happen in 5 years. Inflation for that is 10%. So you will need 26 lakhs. Let's say you get a 7% return on your investment that you're saving for. So today you need to start a 37,000 rupee SIP for your car.
37,000 rupees SIP per month from now itself.
For the down payment of that car, for down payment of 26 lakhs at that stage.
Understood.
Yeah. Now, where can this SIP go 36,000 rupees? Because it's a 5-year goal, right? You don't want to be so safe with it, you're just putting it in, a liquid fund or an FD or an arbitrage fund. You don't want to do that. So where can you put this? The perfect place is a conservative hybrid fund. So in a conservative hybrid fund, it has a technical definition. I won't get into it. In a conservative hybrid fund, you have about 70% of the money going into bonds. The rest into stocks.
Understood.
So you get some injection of growth from the 25-30% of stocks, and
plus the safety of the bonds.
Stability from the bonds. Such funds have done about, over a 5-year period, have returned about 10 to 11% annualized returns. So very high return if you think about it. But I have assumed 7% here because we want to play it safe. And even if I say make this 10%, right, it doesn't affect the SIP amount by too much, only 3,000-4,000 rupees. So why unnecessarily go for that? Secondly, again, you are in a position where you have strong incomes. So if agar 5 lakh kam pada for some reason, you can just pull it out from various instruments that you have built up over the next 5 years. Secondly, you said retirement, right? Retirement is something that you want to save for. So let me look at your retirement number and see what we can do about it. So Saurav, you are drawing about 2.2 lakhs today. Do you want to keep desired retirement income as 2.2 lakhs?
Yeah.
Yeah. So you need 28.8 crores to never ever work again. The way this works is, let me show you.
At the age of 55.
At the age of 55. Do you want to retire early?
No. 55 is
55 is good. Okay. So 21 years runway, and this is life expectancy of 95.
Understood.
So from the age of 55 to 95, you will draw 2 lakh rupees per month adjusted for inflation. So just to give you an idea, now let's go back to your SIP number, right? Can you see this now? You need 28.8 lakhs. Okay, in 21 years. You get a 12% return, you are at 35 crores.
Understood.
Now at the same time, though, you have other things you want to do in life, right? You want to buy a car at some point soon.
Yeah.
How do you then account for this? Let's go through that as well. Any other long-term goals that you have, Saurav? Do you and your wife want to have kids? Their education?
Right now, we don't have any plans. And if you ask me, my personal choice is no kids. At least for next 5 years, I don't have any plans for kids.
Okay, got it. And after that, because if kids become...
See, the thing is, my personal choice is no kid at all.
Okay.
But it is only my wife, it depends on her. Otherwise, for me, it is a no.
Got it. Understood. So let's do one thing. Let's shift this to 2 lakhs with a 5% annual step up. Correct? For 21 years. You're 34 years old right now. And your current money is about 35 lakhs. Okay? Now, 5 years later, when you're 39 years old almost, I have put in an expense of a car here, where let's say the down payment is 21 lakhs. So 60 lakhs car, you're paying 35% as down payment. So at that stage, at a 10% inflation, that's 33 lakhs as down payment, which is getting withdrawn from your investments. If you can see this, like 2.38 and you're withdrawing 33. It becomes 2.09. So this is one goal that we have. We can enter other goals as well. We'll reduce this as well. So this is one goal that you have. No other goals.
No, 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 no. I don't have any other assets.
So if you have a 2 lakh SIP which grows at 12% with a 5% step up, I'm being conservative with it, for 21 years, you're at 33 crores, 33.6 crores with a down payment of 21 lakhs, inflation adjusted 33 lakhs.
Understood.
5 years later. So there you go, right? So with that one goal, you have enough money for 33 crores. If you go back to this retirement calculator,
yeah, I needed 28.
Yeah, let's say you now bump it up to 2.5 lakhs, which is just above that, right? So we'll now make it 2.25 lakhs. So during retirement, you can withdraw 2.25 lakhs, inflation adjusted. By inflation adjusted, I mean essentially 2.25 lakhs. Can you see the screen now?
No, I can see.
Yeah, 2.25 lakhs is 27 lakhs. Inflation adjusted is 1.1 crore.
Understood.
So you can withdraw that amount of money. And that also keeps increasing, right? By 7% every year.
Yes.
So keep that in mind. But all of this is hinged on investing 2 lakh rupees per month.
Understood.
You're currently doing 1.1 plus.
Yeah, 1 point.
In a unorganized way, right? 7,000, 1 lakh, 2,000, 5,000, 30,000 on different months. So does that paint a good, clear picture?
Yeah, I understand.
How it would look like? Yeah. Super. So arbitrage funds we want for our interior designing. So we put in 1 lakh rupees every month there.
Exactly.
Then for your long-term goals, you're putting in 2 lakhs. Of the 2 lakhs, about 35,000 goes towards your conservative hybrid fund.
Exactly.
For your car. Rest goes towards your long-term goals. So your large cap, mid cap, small cap.
Mid cap and small cap. And in that, ideally, the large cap should hold a little higher amount rather than what I'm
I would say is a good amount to have. The rest divide over mid and small caps. That's also significantly aggressive, but you're used to it. So it's personal finance, right? Different for different people. So used to it.
Yeah, exactly.
Yeah. Apart from this, one very important factor that we want to consider is insurance.
Yeah.
So you have a home loan right now of about 1 crore. Do you have a home loan insurance for the home currently?
No.
Then, Saurav,
it is an absolute.
Today you need to apply for it. I'm not scaring you, but it's a big liability, right?
Understood.
So it has to be covered.
I wanted to ask you this thing now that you've got this question. The home loan insurance. My whole idea of not taking a home loan insurance was that anyway I will be taking a term insurance.
Correct.
So that's fine not taking,
absolutely, right? Absolutely. Yeah. Take a term insurance. For you, I would say take it till the age of 60, maybe 65, because you may or may not have kids. You'll get to know the next 5 years. But even if you have a kid at the age of 40, kids are reliant on you for what, 20, 25 years of their life at the most, 20 usually. If you live until 60, you've built up enough savings anyway through your investments. So opt for one till the age of 60. The two other kinds of insurance that you must absolutely otherwise have is you should increase your health insurance coverage through a super top-up plan. So super top-up means you currently have a cover of, let's say, 10 lakhs for yourself.
Are you talking about the one where they cover up till 1 crore, but after spending the 10 lakhs?
Exactly.
And tell me a few companies regarding that also, because I've heard about this.
Yes. So what I'm going to do is, Saurav, right after this call, I have a health insurance course. I'm going to give it to you for free. There's a coupon code that I'm going to give you, so you can use it for free. It has a plan selection tool. So you want a super top-up plan, you select that and it gives you which super top-up plans.
And can I take that for my parents as well?
For your parents, if they're above 65, it changes a bit, but a super top-up is available for that as well. So there's a section for that too. So you select above 65, you want a super top-up for someone above 65. Then you get 2 to 3 plans, how they fare against each other, and my 20-minute video comparison as to how the plans fare against each other, against 8 to 12 features that are most important. The third insurance that becomes very critical to both you and your wife is an accident insurance.
Understood. Like in case if someone faces an accident and is not able to work.
Exactly. Because your work is so tied with your ability to move your fingers, move around with your legs.
Stop earning basically.
Correct. So if because of an accident, whether it's a car accident.
So this is a totally different insurance.
Totally different insurance.
And what is the roughly premium for this one?
So I would say you should at least opt for 1 crore in terms of coverage. And for you, it's not dependent on age. For you, it would be about 10 to 20,000 somewhere in the middle of that. 15,000 pakad lo.
Yearly.
Yearly, correct.
And for how many years we need to pay this?
ideally for as long as you're working. Because,
Okay.
because this accident insurance is like an income replacement if you can't work. Or let's say
Understood.
this sounds very morbid, but someone loses a finger and because of that, their ability to work gets affected. So you get paid a percentage of that 1 crore. The 1 crore is triggered if you have total disability because of an accident.
Understood.
Or a
Understood.
permanent disability because of an accident. Yeah. For a fracture, you will be paid say 1% of the 1 crore. Or if you can't work, if you are temporarily totally disabled, then you can withdraw in good plans. The company will pay you 2 lakh rupees per month for 2 years. So things like that become very relevant. So I think anyone who requires moving around a lot needs their finger. Most of us, right? We type with our fingers.
Yeah, exactly.
We are moving around. Accident insurance need of the hour. Absolutely must have.
Thank you so much.
Hope that was helpful, Saurabh. Hope that was helpful.
That was very helpful.
I am glad. I'm glad. The entire point is to have these conversations so that people listening in can also apply some of the things that we discussed to their own life. And at the same time, because this is through your experience, it becomes a better learning experience. Right?
No, trust me, whatever knowledge I have, a good part of that is because of your Instagram. So thank you for teaching people like that.
Thank you. Thank you so much, Saurav. That's the sweetest thing I think anyone has said to me. So thank you so much. I'm so happy. Yeah, thank you so much for being on the show as well. It was very kind of you
so much.
to.
I loved having a conversation with you. I loved knowing something more about the finances. And as I said, I keep following your Instagram stuff. So whatever knowledge I have, a big contribution of that is because of your page.
Thank you so much, Saurav. Thank you so much. Hopefully, even such videos like this will help out you and a lot of other people. That's the intention.